There is one more very important thing about real estate investors should understand. Depreciation is a great tax benefit while you own the property. But what happens when you sell it? When you sell a rental property, the IRS usually requires you to account for the depreciation you have claimed over the years. This is known as depreciation recapture, and it can increase your taxes you own when you sell property this year. Maybe you did cost segregation study, and within first 5 years you wrote off in your annual taxes depreciation for 27 years for your property. So of course the IRS want to recapture, get this money back. Many real estate investors don't hold the same property forever. They usually hold it for 7 years and then sell it and purchase next one, which is known as 1031 exchange. Because over the first 7 years, basically you took already all the tax benefits possible, and to write stuff, all your taxes, you need to go and buy next property via 1031 exchange. If all the IRS requirements are met, a 1031 exchange generally allows you to defer capital gains taxes and depreciation recapture by reinvesting the proceeds into the next investment property, which should be more expensive than the one you are selling if you want to take the full deductions. I have a specific video about 1031 exchange and details, because it's a lot of small details, time frame, so you have to do it within 45 days, you have to name the address for the new property. So it's a lot of details, so please talk to your experienced real estate agent and talk to your CPA or a tax attorney. Another reason depreciation can be valuable is what some investors expect to be in a lower tax bracket when they eventually gonna sell this property and retire. So maybe when you buy this property, you're young, you have 40% tax bracket. And when you're retired, maybe you have only 10% tax bracket. So you're not gonna pay the whole this capital gain. But again, you have to talk to your CPA, because every situation is different and it depends on your individual circumstances. And that is why it's important to think beyond today's tax saving and have a long-term investment strategy.